Namaste and good evening, friends. I'm Vinod
Good evening.
Sharma, Head of Private Client Group and Capital Market Strategy. I have with me Mr. Deepak Jasani, Head of our Retail Research. So, Deepak, welcome to the show. So, how do you find Mr. Goel's maiden budget?
Uh, Good evening. Now, this was anyway an interim budget, so not much expectations were there ahead of the budget in as to what dramatic changes that it could bring in. But people were talking about some small tinkering in the direct taxes and some big announcement on the farm loan
Hmm.
things, farm distress thing. So which has come. So to that extent, it is as per expectations. But if you are having great expectations about lot of changes here and there, then probably you are disappointed. But there was no need for you to expect that.
Hmm.
Uh, Now, in terms of numbers and all, I think farm distress may he has sort of provided some 75,000
Yes,
crores. You
yes.
think how good or bad is the number?
I think the number, if it comes to per farmer, it's just 6,000 rupees. 75,000 the crores that has been committed is less than what the other income, what the people had thought universal income was, which was thought around 18,000. Obviously less than that, but nevertheless, it needs to be compared with the fact that there were parties like Congress offering farmer
Much higher amount.
much higher amount and saying that will not you can will say that you do not have to repay the loans. Now that is a very credit culture that will break the credit culture. So I think this particular scheme is to be appreciated from this perspective that it doesn't make the farmer go and say that I am raising my hands. It helps him with his distress and keeps his credit rating ability intact. This is what I feel. Although, but this is an annual feature, so it will be a burden on the economy every year.
Right. So that is a big thing. And so once we start with it, there will be demands for the per farmer or per hectare allocation to be raised. So how are we going to raise money going forward to meet this kind of expenditure is an issue. But yeah, currently we are focused only with this current year's dispensation. So that 75,000 crore may not be enough,
Yeah.
but I think it is a good beginning, and it may have its own downward trickle down effect on the entire economy.
What, according to you, is a worrying point in the budget?
Uh, Actually, not being a full-fledged budget, there are not too many worries. I think the only issue is about the 3.4% fiscal deficit which he has projected for FY20.
Yeah.
The expectation was it would be between 3.1 to 3.3%. It is slightly higher. Now he has a justification of the 75,000 crores spend for this higher budget deficit. But the only thing is, now politicians will have some justification or the other every year. So for how long we'll have to sort of make do with this 20, 30, 40 basis point leeway or slippages. That is a question, because we will have to at some point start tightening, because the debt is ballooning year after year, and our future generations may not pardon us if we don't tighten our belts right now. Otherwise, I think the middle class people will be happy generally. You think?
I think the middle class of the lower strata definitely will be happy. Obviously, your taxes are not going to be reduced,
Yeah.
but nevertheless, people who are earning less than 5 lakhs will feel will be feel redeemed that they do not have to pay any taxes. So very important. Also, the housewives, the dadima, the nanis of the world who keep FDs in the banks, they are,
TDS.
yeah, TDS. So the fact that the TDS has been raised from 10,000 to 40,000 will be very helpful to them. So they now do not have to file an income tax return just to get back their TDS. So I think to the common man, it's very helpful.
Yeah, and that is what I think they are targeting prior to elections.
Yes.
Probably they will be successful to some extent in this.
Okay.
That only time will tell. But yeah, apart from that, self-occupied property, no tax for two houses. That is also one small good thing.
Yeah, it's for the people in the middle income,
Yeah.
especially people who are going to other cities.
Yeah.
They have to maintain two houses. It's good for
And
them.
standard deduction 40 to 50, that will benefit everyone,
Yeah.
irrespective of your tax
Yes,
slab.
yes.
So that is a small thing which will help save about 3,500 per year for the
Mhm.
people in highest tax bracket. So that is also good. Now, that 3.4% fiscal deficit has also resulted in sort of bond yields may harden a bit in the near term because of expectation of higher borrowings by the government. But I think if the sentiment stabilize, then again we'll come back to 7.4, 7.5%
I think,
in a matter of time.
yeah, my own view, Deepak, is that we could see bond yields going lower down the line because the apprehensions are there at the first and the beginning itself. Now, if I were to play the devil's advocate from the government side, I will say that the fact that 75,000 crores is being put into farmers' pockets and in their banks, it also has a cascading impact on the economy. So this has the potential to increase our GDP by 100 basis points. That is one full percentage point the GDP can rise, which in turn will mean that the fiscal deficit of 3.4, apparently which looks at 3.4, may even be 3.3 to that extent, because if the denominator goes up, then the percentage
Sure.
falls.
Yeah. And one other good thing is that people are expecting large capital receipts from RBI, which is
Yes.
not there in the sense.
Yeah, they have assumed something, but
Which
yeah,
is not very large.
yeah, very large.
So which shows the prudence of the government. Even the exiting government is showing a lot of prudence, which is a very very good thing. I think we have to appreciate whatever is good in the package. And apart from that, I think GST collections, there is some aggressive expectation, and but I think
yeah, that is very difficult to
this
say
point
that
of
they'll
time,
be able to achieve 18% growth.
18% growth
Yeah.
is too aggressive at this point. But if the economy starts to behave,
Yeah. I think the government has the right to dream about a higher, let's say, collections, primarily because we would see that the last time when the markets had a 1 lakh crore collection in GST, it was in the month of March. After that, we've seen numerous times the GST percentages have been going down. Let's say a commodity which attracted 28% is now in 18. One that attracted 18 is now in 12, and 12 is now in 5. So with the taxes going down, and despite that, if the collections have come up again to 1 lakh crore, I think that is some credence. One could also feel that either the let's say the people who are complying, that is on the rise, which I think will happen, and it is a twofold function. One is, I also believe that the PM has said at some point of time that he wants that most of the things should be in the 5% bracket, so that there is no leeway, there is no lure to escape from that net and willingly pay. I think that is the day on which, at that one time, even 18% buoyancy that you're thinking will be crossed. But currently, we have to take this 18% growth with a pinch of salt, of course.
right? So I think sectoral impact wise, only real estate is marginally positive, I suppose. Rest all no other sector is impacted, and FMCG to some extent, consumer sector.
Yeah. The real benefit is to the real estate sector, and it's good that the capital gains has been capped at 2 crores. So it is essentially will only help the middle class. Another factor that I would like to point out is the fact that the class of unorganized labor, the people who are earning less than 15,000 rupees, I think they have got, if they pay 1 rupee per month, they can expect something like 3,000 rupees per month as a pension scheme.
After 16.
And if they start at 18, they just have to pay 55 rupees per month. So the power of compounding at work. But I think if this actually works out the way in which government is planning, we could have something like 10,000 crore people. Sorry, not 10,000. Yeah, 10, almost 10 crore people who would be coming in here in this scheme, which will make it the largest pension scheme in the world. So I think in India, we've been saying that we are not paying taxes because what is the government doing for us? Now the government is doing so many things, and people will fend for themselves. So I think the tax compliance will also rise going forward.
There is one more thing about stamp duty. Now the exchanges will collect stamp duty and pay on behalf of the brokers. So for brokers, it is slightly better. Litigation and procedural hassles are less. Of course, there is slight increase in the stamp duty vis-a-vis the current Maharashtra rates, but that is, I think, very minor to complain about at this point of time.
That will cut down on the costs.
Right. So net, I think nothing much from the budget, but whatever is there is overall, I think, quite welcome. So what do you think the markets, how will they pan out going forward?
My sense is that markets were anyway expecting that this will be election budget. So if it let's say looks like a duck, and if it quacks like a duck, it has to be a duck. So it was
Trainer.
no pretensions that it was not an election. It was an election budget. So I think the middle class was feeling unhappy with the current dispensation. So I think they have managed in a way to woo them back into their fold. And the fact that it will collect so many people in so many other ways, I think it does improves the chances of the current dispensation to come back in 2019. The moment the markets realize that this is going to happen, we could, in that sense, see a rebound in the markets. Otherwise,
Yeah, but the memories are very short term,
yeah,
and people tend to sort of take whatever is given to them in their stride and expect more and more going forward. So I think that is some time away. And election related, global trade related, and such like tensions remain on the horizon. Corporate earnings are also not that great in this quarter, I think.
yeah, we saw.
So, from those perspective, we don't have too many positives to look forward to in the near term, till at least elections are out of the way. So, broadly, they will remain range bound with some volatility here and there. And
Yes.
stock specific action is suggested, and you need to do your asset allocation. In case you are overweight on equities, you have to bring them down and sort of look at debt and other options for some time until we see very attractive levels to jump back into equities in a big way.
Yeah. Before this, we had some 2 days back, we had another webinar before the budget, and we had said that budget is just one of those events which moves the markets. There are many other things. So I would like to point out to our viewers something which has happened now, is the fact that the US government, the US Federal Reserve, has turned a complete 180 degrees. So from a very hawkish, they have now turned to dovish, and they've also spoken about they will review their curtailing of the balance sheet, which was contracting by $50 billion every month. Even that can be considered. So I think the external environment is looking good for us. And as far as crude is concerned, crude can go up because of Venezuelan sanctions which the US has put on them. But since US is now responsible for the crude to go up, it might not be able to force Saudi Arabia to increase production and to bring down the prices. What then happens is it might say that countries like India, 8 countries who are importing from Iran, they might be extended time beyond the. So this environment is good for us. So my sense is that this is not the only win, and the government policy doesn't end with the budget. We have a Reserve Bank of India meeting coming up.
We have a lot of triggers continuously coming up, so we'll have to keep looking at them, interpreting them, analyzing them, and then take a call as to which way the markets are headed.
You'll like to recommend any particular stock from the large Nifty?
No, I don't think this is the right forum. So I think that's all for the time being. I think. Thank you very much.
Yeah.
Maji.
Thank you, Deepak, and thank you, gentlemen, for joining us. Have a good day and a nice financial year ahead of you.